window.
Hello, traders. Gary Wagner with the Gold Forecast here. Approximately 10 a.m. in Honolulu, Hawaii. Thursday, the 7th day of April. And this is the Daily Report. Yes, traders, yet another record high, yet a higher close in gold today. We have approximately an hour left in trading in the Forex markets today. It is currently trading up, gold that is, 1461.10. 1460.10 bid-ask spread, putting it up about $1. Traders, we are looking at a daily chart. This is the daily chart that we draw our channel lines on and have our Elliott wave count. As you can see, what I've done is I have converted it into a Henkin chart for our viewing this morning. And what I have noticed, and the reason that I brought it up, is that it truly appears as if the trend, this uptrend, is actually beginning to strengthen right now. This according to our Henkin candle, because if we look, we had the market move up. This is that wave 2 correction here, and then the beginning of wave 3. So we had our first part, we had the slight downturn, and now as you can see, we are on this, call it the third leg of this third wave. And what I'm really noticing is that the size of this candle right in here has really grown. And what that is significant of is a trend which is strengthening in the marketplace. One. Secondly, you can see that there is that absence of lower wicks, and that's the other thing that we look for within the Henkin chart itself. Now, when we compress this chart just to get a little bit more room in, we can really take a look at the overall picture. Again, this is daily. It is in Henkin format. And when you blow it down this tightly, of course, we're not looking so much at individual Henkin candles as much as we're looking to see these broad strokes. In other words, these types of rallies that you might have in here, and exactly when we see the corrections, how these corrections take place. And you can derive some really, really interesting information, and you can also see a sub-wave count quite eloquently when you simply look at these colors reversing back and forth. You can see the count itself as it develops. What I see when I look at this chart, of course, we have broken above all of our tops, but right now, there's no doubt our acceleration is almost a straight linear or vertical move up. As long as it maintains this type of stance, it's not really going to fall within any of these channel lines. So when I say fall within these channel lines, really what I'm referring to is being able to move up the path of a channel line. As you can see, for example, in certain areas like right in here, you can see where it really trades back and forth between these channel lines. You're not going to get that when you get this straight acceleration. And that's what we're witnessing right now. The last time that we saw that type of activity, of course, is right here, which is that wave number 1. Now, when we look at our weekly Henkin chart, this is a weekly, of course, gold chart. This is a different chart, but I do have some numbering on here just so we can have a roadmap or some signs from one chart to the next. But what you can see is now the week is not over. It's still Thursday, but we're close enough that we do see when we look at this big trend, you can see we have a pretty clear set of indicators that are moving this market up. When we compare this week, and it's tentative because we still have tomorrow, but when we compare this week, of course, to the weeks prior, these last 3 weeks, you can see A, the body size has grown, B, there is the absence of a lower wick, and so that does bode very well on the bullish side. And for our last chart of the day, again in Henkin format, but this is a 240-minute chart, meaning every Henkin candle represents 4 hours of trading time. And what you can see within the marketplace itself is that, and we've talked about this before, that genuinely what we tend to see are periods of aggressive growth or retracement followed by periods of consolidation. And so where the market will consolidate, you can see that very, very eloquently in the 240-minute chart, and then it kind of just takes off and takes off running. You can see these consolidation areas when the market is moving towards its next price level. Now, in terms of the current price level, of course, we are at record tops, and we have the market is now trading unchanged roughly at 1459, and you can see that we are once again in that tight range, that consolidation range right in here. Typically what happens is that pressure is going to build as it consolidates, and then it is going to break, and usually it breaks rather hard the longer it consolidates. Traders, we certainly want to maintain our long position here. I talked to you yesterday about scaling or adding. There's dips in the market that you get throughout the trading day where the market's trading. For example, today it's been up $1 or $2, but there's a couple of points where it might be down $2. There was a point yesterday. Those are the points that you can look to add very small incremental portions as you scale into the market and add to the position. If we have a sizable dip, of course, and I'm looking to add to the position, I will absolutely send out a separate email letting you know that. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Friday for the weekend review. Bye-bye.
When I look out my window, many sights to see. And when I look in my window,